All right. Good evening, colleagues. Please kindly
Hello.
if I'm audible on your side, if you can all hear me.
Yes, we
Hello.
can. Yes, we can hear you.
All right, that's perfect. So welcome to our second lecture for our Text 761 tutorial session. So you notice that from the first lecture that I held with you guys last week, I began to introduce you to the concept pertaining to gross income. And one of the things that we began to look at was pertaining to the elements of the gross income definition. So just as a quick recap, I'm just going to quickly take you to the outline of the elements of the gross income definition. And then obviously we're also going to have a discussion on how these principles are tested in an exam setup or in an exam situation. So now, from last week, I began to unveil to you the definition of gross income, the elements thereof. So the elements being the total amount in cash or otherwise received by or accrued to or in favor of a taxpayer. So the person there, it can be in this context, it can be a natural person, or it can actually refer to a business entity, right? So those are the two classes of taxpayers that we deal with when we are looking at text 761, right? And then obviously from anywhere in the case of a person who is a resident. So in other words, what that means is as a resident, you are taxed on all the incomes which you have earned around the world. And from a South African source in the case of a non-resident. Now, these two, they're not necessarily the elements to the gross income definition, all right? But there are four rather, which is the total amount in cash or otherwise received by or accrued to a taxpayer. Then there's another part that says during the year of assessment. And then lastly, you've got the other than receipts or accruals of a capital nature. Other than receipts or accruals of a capital nature. So this particular one is usually the last element to the gross income definition. So when you get a question where they want you to discuss whether a particular amount can qualify to be part of the gross income of a taxpayer. So you'll be discussing, the applicability of that particular amount on the basis of the elements to the gross income definition. So there is a question that I'm going to do with you guys today, just so that at least you have a better perspective of how these questions can be examined. Normally, it can be like a 10 marks question, or it can even be a 15 marks question, depending obviously on what you need to discuss. So we're going to definitely have a look at question 2.6. I've sent that tutorial later. I'm going to do the discussion with you concerning this question, but I just wanted to finish a couple of items from the notes first before we get to the question. But just take note of it that we're going to discuss question 2.6 today. There's another question that I was looking at earlier. Okay, it's a 15 marks question actually. Let me quickly scroll down. Yes, this one, question 2.11. We're also going to have a look at question 2.11. So there are two primary questions we're going to look at. So it's question 2.6 and question 2.11 from tutorial letter 102 that I've shared with you guys on the group. Now you discover for the 2024 academic year, there is tutorial letter 102 that you would find on my UNISA. It literally contains the same information as what you have from this particular tutorial letter. The only difference is obviously it will be the details in terms of the timeline that they'll be discussing in the context of that question. That will be the main difference. But what I would do going forward, I would use the most recent tutorial letter, just so that at least we keep the relevancy. But the principles are the same. That's what matters the most, right? So having said that, colleagues, let's come back to our discussion so that at least we have a clear understanding of what is happening. So these were the elements that we discussed, and I did emphasize to you that under normal circumstances, there are questions whereby they would ask you to discuss the gross income definition, and then they would also want you to justify whether an amount would qualify to be part of the gross income. They would want you to justify your discussion for each one of those elements by using what we call case laws or court cases. So court cases or case laws is one in the same thing. So for each one of these elements, you discover that there is a court case or a case law that is applicable to each one of those elements. So whenever you're giving your arguments, it's imperative that if they indicate in the question that you need to substantiate your discussions with case laws, then you need to also endeavor that you give the case law principle. So it's not just an issue of saying the case law applicable, it's butcher bros, full stop. You don't just leave it like that. So you indicate the case law applicable and the actual text principle that goes along with that particular case law or court case. That's very important, guys. But anyways, one thing I love about the questions they bring to you guys, they indicate whether they want you to discuss, with applicable case laws, or whether to do the discussion without quoting the case laws at all. So it's always just important to have a look at what the required section of the question stipulates. So, right, to proceed from today's discussion, previously, we had actually dealt with all the elements to the gross income definition, and we actually ended with this particular element, which deals with other than receipts or accruals of a capital nature. So I wouldn't want to repeat what I've already discussed, but guys, I want you to take note of the fact that this is one of those elements which would give you guys a lot of marks, especially when you do the discussion to what is being provided to you in the scenario. Right? So it's very important to understand, to say when we're now assessing whether an amount or a receipt or the accrual in this case is of a capital nature or not, it's important to remember what are those aspects that you need to look at when you're dealing with this particular element to the gross income definition, right? It's very important. So one of those things that we begin to look at, obviously, is the nature of the receipts. So that's the first important thing that you need to look at. Why I'm re-emphasizing this, because I know when we get to discuss the two practical questions from your tutorial later, right? Now, by the way, those questions that you see at the end almost of your tutorial letters, those are typical examinable questions that they can actually bring to you, even in your year test or even in the actual exam. So it sort of like gives you a perspective of the line or style of testing which they use. Because they also provide solutions to that, it also gives you the line of answering or style of answering which they want you guys to use or to follow, right? So it's very important that you take note of those things. So you're gonna notice that whenever I discuss a particular topic, I will do a couple of questions, say from the tutorial later, right? And then I'll also do maybe a couple of those as well from past year tests and past exams, right? So we're gonna follow it in that order. So right, coming back here. So I mentioned that when you're discussing this element, you need to look at the nature of the receipt. And when you're looking at the nature of the receipt, one of the things I emphasized is to say, is it a day-to-day transaction that you're looking at, or is it perhaps a once-off transaction? So if the answer is, if the transaction constitutes of a day-to-day transaction, therefore it means the receipt or the accrual in question is income in nature. So if it's income in nature, it simply means that it's not of capital nature in that case. And by the way, if it's also income in nature, it implies, it qualifies to form part of the gross income of a taxpayer in a particular year of assessment. However, if the transaction is once off, under normal circumstances, it would ultimately end up being a capital nature, right? And when it is a capital nature under normal circumstances, it would most probably attract CGT, what we call capital gains tax consequences. A once-off transaction, guys, is one whereby it does not form part of your normal day-to-day transactions, which obviously would bring forth income to the company. But it's one of those that just happens, you know, maybe once off or unplanned at all. For example, maybe they decide to dispose of one of their delivery vehicles, and whereas the business is actually let's say maybe it's a grocery store, for example, like your Checkers, right? So Checkers is not in the line of business where they are selling vehicles, but they are really selling different grocery items, commodities, so to speak. So if they happen to sell some of their delivery vehicles, such transaction of that form or of that nature cannot be considered to be a day-to-day. It's a once-off transaction, and it has to be dealt differently. And that's where CGT consequences actually can be attracted. Right? So those are some of the things that I emphasize when we're dealing with this particular element. But I've already discussed that in the first lecture, so I don't want to repeat what I've already explained, but I just thought let me bring it back to the surface because it's important considering what we're going to be discussing in the questions, right? So I want us to continue. With our discussions. Okay, I've already dealt with this, so I'm not going to repeat that. So one of the things also that you will discover, and by the way, it will be a separate lesson altogether. There are certain items, I'm just going to take you to the whiteboard screen so that I can point out this. So when I was introducing the concept to you, I did mention something about the text framework. And I mentioned to you that with the text framework, you have gross income. Let me just change the color so that it doesn't look awkward. So now I did mention to you that on your text framework, you've got gross income, which is made up of two things: items that forms, that gets included in gross income because of meeting the definition of gross income. And secondly, you've got those that forms part of gross income because they are special inclusions. Right. So I did mention those to you that with special inclusions, it's a topic on its own. And this is Learning Unit 3, according to your study guide. Okay. We're going to have a discussion about this after I'm done with the concept of gross income in its entirety. But the reason why I'm just pointing it out to say, well, it's one of those that is important for you guys to notice, because in my notes, you'll notice that I've indicated something to do with special inclusions, but not as extensive as it ought to be. So I'm going to be giving you guys some updated notes when we get to Learning Unit number 3, where we'll be dealing with the specificities concerning the different special inclusions to the gross income. Now, what are special inclusions? Just at a high level. So special inclusion, these are certain items, or should I say amounts, or other income sources that a taxpayer could accumulate, which SARS would allow to form part of your gross income during a particular year of assessment. So let's say, for instance, it's a business organization in question that we're looking at, and maybe their primary business is to sell vehicles, right? So they are selling vehicles. So the vehicles, obviously, that they are selling, it's considered trading stock or inventory in the books of the business. So then the common source of income there, it's the sales or the revenue from from selling of vehicles. So the revenue or the sales from selling of vehicles, that one in particular would qualify to be part of the gross income of the taxpayer by meeting the definition of gross income. But the moment we begin to talk about, let's say, if the company in question has investments in other companies outside, right? When I'm saying outside, I'm referring to whether it's in the local domain of operation, or it could be maybe from another country altogether, right? So it means what they're going to receive from their investments in those companies, it will be what we call dividends. So when they receive dividends, obviously dividends can come in two forms here in this case. It would either be local dividends. So I'm just trying to introduce slightly the aspect to do with special inclusion. So it can be local dividends. And then obviously they also have foreign dividends. All right. Now, it's not only that income can come from, investments which the company have made in other organizations. Sometimes they can just simply put money in a fixed account in a bank. And this can either happen locally also, or as well as it can happen internationally. So if it's local, so they would receive what we call local interest. Okay. Local interest received. And then if it's obviously foreign, it will be foreign interest received. Okay. And then, so this is just to typically show you the difference between items that qualify in the gross income definition, the gross income of a taxpayer, when you're trying to assess the income. So there can be those that would be by virtue of meeting the definition of the gross income, or it can be included as a special inclusion, meaning to say these are incomes of a taxpayer, but coming from another source and not necessarily as a result of day-to-day transactions. Things like recoupment. Recoupment, you would see it especially when we are dealing with the disposal of a delivery vehicle, like such as the example that I gave earlier of a company like Checkers, which is in the business of grocery sales, right? So there will be recoupment, but recoupment comes as the result of the CGT consequences that I mentioned earlier. But we're going to talk about this in a greater detail when we get to learning unit number 3. So these are just some of those that I think you need to you just need to be aware of. But there are several others, like for example, because we're not dealing only with business entities, we're also dealing with individuals. So when you're dealing with an individual, all right, can actually receive fringe benefit, right? Apart from their normal salaries, other things that they can also receive from the employer, it can also be fringe benefits, right? So those would actually qualify to be part of the gross income of that taxpayer as a special inclusion. And there are different types of fringe benefits that a taxpayer can receive. I'm talking in the context of individuals. So they can receive vehicle allowances, travel allowances, holiday home allowances, stuff like that. You're gonna see most of those when we get to learning unit number 3, but I'm just trying to point out even bursaries as well. It's part of those, especially if ever your employers are the ones that are, they say, funding your studies. It's part and parcel of your fringe. It's part and parcel of what would be regarded as fringe benefit to be included in your gross income when you're doing your books for tax purposes, right? So anyways, let's go back now to our discussion from the tutorial letter that I've shared with you, right? So I'm not going to continue on this particular slideshow in the notes, because now the rest of the other items you'd see they deal a lot with special inclusion, so which I don't want to discuss at this point. But there is a question, obviously. Okay, so this I'm going to talk about when we begin to deal with special inclusions on the updated notes, which I would share with you in due course. And same thing with exempt income. I'm going to talk about that later, right? Oh, this is a very good example that we could look at, but let me first take you to the one in the tutorial letter. So if you may, there's a tutorial letter that I've shared with you guys on the group, tutorial letter 102, and please kindly go to question 2.6. Kindly go to question 2.6 in that particular tutorial letter. So now here's the exam technique approach that you should always follow when you're addressing questions in the exam or even in the year test. Always start off by looking at or rather by evaluating the required section of the question. Understand what exactly the examiner wants or expects of you. So in the required section in question 2.6, we are requested to discuss with reference to the gross income definition. So the moment you see with reference to the gross income definition, you're already thinking about those elements of the gross income definition. The total amount in cash or otherwise received by, accrued to, in favor of a taxpayer, other than receipts or accruals of a capital nature. All of those should actually begin to revolve in your mind, right? So it's important. And then, but let's continue. So let me read the question again. So they say, discuss with reference to the gross income definition, whether the money is received by Mama Tembo in December 2023. If you look in your 2024 tutorial later, it will be showing something like 2023, right? Will be included in her gross income, and then no reference to case law is required. Notice here, no reference to case law is required. Okay, quite interesting. And then I want you to look at the mark allocation given for this particular question, 10 marks. And then I want you to look at the difference between this question and I believe it should be 2.15, or I mean 2.11, right? I want you to look at this one, just the required section only. They say discuss, giving reasons whether the proceeds from the sale of flats will be included in Red.Pty Limited's gross income for the 2021 year of assessment. And then I'm looking at the mark allocation dates given as 15 marks. Now, the moment I'm seeing that, and there is no instruction given to me as to whether or not I should include case laws in my discussion, automatically it implies you have to give account of the case laws in such a question. So like, for instance, question 2.11, you are expected to substantiate your arguments with case laws. Are we together, colleagues?
Yes.
Right. But whereas when you go to question 2.6, they specifically said you should not, no reference to case law is required. So meaning to say you can simply discuss the, the elements without necessarily giving any reference to the case law. So without further ado, let's have a look at the question and see what is stipulated. So they say Mama Tambo has owned a very successful guest house in Soweto, South Africa for the past 9 years. Okay. Her guest house often hosts overseas tour groups and is also popular with the local market. She has never considered selling her guest house. All right. Now, when I look at that, before I even go further with the information that is given, obvious, one of the things I always want to establish in my mind is what type of a taxpayer am I looking at? Is it an individual or am I dealing with a business organization? So in this context, obviously, it's an individual that is owning a business in form of a guest house. All right. And if I look at the question, they're saying discuss with reference to the gross income definition, whether the money is received by Mama Tembo. Mama Tembo, it's the individual. So the text we are looking at here, it's for the individual that is owning, that has received certain funds here in the context of what we will be told. Now, in June 2020, a large listed company saw the value in Mama Tembo's guest house and offered her 3 million for the guest house. Now, okay, so this, okay, cool. Then Mama Tembo's cousin is the chairman of the Redevelop Soweto Committee. Mama Tembo knows that major redevelopment plans for Soweto will be announced in the next month. Now, these plans will significantly increase the value of a property. Now, look at this. Mama Tembo declined the offer from the large listed company. So what is the offer that she has denied or that she has declined in this case? It is the 3 million rands that she was offered when? In June 2020. All right. Now, the major redevelopment plans were announced in July 2020. And during August 2020, Mama Tembo obtained an independent valuation for a property which actually amounted to 8 million rands. She approached the large listed company and agreed to sell her guest house for how much? For 8 million rands. Now, the sale was concluded and all monies were received by Mama Tembo when? in December of 2020. Now, in the context of the question, they'd already given you the year of assessment in question. And how do I know what year of assessment this is? Or rather, how do I know the actual year of assessment for this particular taxpayer? Well, since it's a natural person, colleagues, it's important to remember that with natural persons, the year of assessment runs from 1st of March to the end of February of the following year. So in this case, it will be the 1st of March of 2020 up to when? So it will be the 1st of March (2020), and it will run up until the 28th of February in 2021. Is it making sense? But
Yes,
if it's like this, obviously now that's the 2021 year of assessment. All right. It is the 2021 year of assessment if it's like this. So for the 2020 year of assessment, it would be something like, so this one is actually the 2021 year of assessment anyways. But for the 2020 year of assessment, but that is not the most important part for this question, but I'm just trying to help you to understand timelines or year of assessments of taxpayers, especially looking at the context of whether it's a business or it's a natural person. Right? So in this case, for the 2020, it would have been something like 1st of March, 2019, and it will be ending on the 28th of February in 2020. Right? So this is the 2020 year of assessment. That's how it would look like for an individual. Okay? So that's how it would look like. Right. But if it's a business, so in the context of a business, we always look at the year of assessment. I mean, the financial year end of that particular organization, right? When they open their books and when they close them. So it could be maybe anything between 1st of January 2020, maybe up until December of 2020, right? But that's not the most important part to this question. So let's go back here and see what is happening. So I'm going to open a Word document just so that I can give you how the presentation, how it's supposed to be. Right. So, but I'm going to be reading it. I'm going to be reading the question and then doing the answering of the question here. All right. Okay. Okay. I'm just going to indicate, I'm going to save this as question 2.6. Text 6. Okay, good. So now let's go back to the question. So the question is saying, discuss with reference to the gross income definition, whether the money is received by Mama Tambo in December 2020 will be included in a gross income, right? So under normal circumstances, when you're doing the discussion of the gross income definition, here are the things that you need to do. So it will be some sort of like a table. Let me show it to you. So I'm going to insert the table here real quick. So it will be like a 2-column. So on this 1 column, this is where you're indicating the elements, all right, of the gross income definition. Okay. And then on the other side, this is where you do the discussion. Are we together? Right. So I'm going to just list the elements for you. So the first one, obviously, is which is not, so the one which would actually accumulate you a lot of marks is the one which is the problem, which seemingly appears to be the problem in your discussion. So the other ones you would find normally that they will be too obvious because they will be given to you in the scenario. So you will not get much of the marks for that. Where you get marks is where you have to show facts be given in the scenario to substantiate your argument or your conclusion. That's where most of the marks would actually come from. So like, for example, the first element which I would combine, it would be the total amount in cash or otherwise. You can combine this as one element, okay? So I would consider that to be the first element. So the total amount in cash or otherwise. This one is quite clear and it's definite in the scenario. I mean, we've been given that information, so it's clear for us to give the argument there. So I'm going to point it out. Then the second element is what? Total amount in cash or otherwise received by, accrued to, or in favor of a taxpayer. Okay. Then the third one, which is where the issue is, that's where most of those marks, the 10 marks, that's where most of them would actually come from, is the other than receipts or accruals of a capital nature. Normally, when you're dealing with the discussion of the elements, they normally want it presented in this format. So this is question question 2.6. Okay. So they normally want it presented in this way, but I'm not saying that you're only limited to this format in terms of your presentation, but here I'm just trying to make it simplified for your discussion purposes. Okay. Right. So now, if quite clearly defined in the case scenario, we already been given the amount which this taxpayer was paid. How much was it?
$8 million.
8 million rands, right? For the disposal, I mean, so for the selling of her guest house, right? This one is quite clear and straightforward. You can get half a mark just for saying that, okay? Because where the issue is, it's right over here. So I'm just going to put this in italics because this is where most of your marks would come from. These other parts, they are clearly given to you, and there's no need for you to be quoting court cases. So that's why they will not allocate so much marks for the elements which are already clearly given to you in the exam, right? Then now, received by or accrued to or in favor of a taxpayer. Well, obviously, the amount was received. So you mentioned the date now, was received by, what's the name of that person? Mama Tambo, right?
Yes.
Mama Tambo, rather. On the, what date was it that we were given? When she received it? In December, rather.
Yeah, December 2020.
Yeah, in December 2020, right? So the amount was received by Mama Tembo in December 2020. They did not necessarily give us a precise date, right? So the amount was received by Mama Tembo in December 2020 for her benefit. Okay. So that's what I mean. I'm trying to imply the fact that it was necessarily received in your favor and not to the benefit of another party elsewhere. But now, these first two that I've already outlined for you, that's not where the issue is. The issue is here. This is where the issue is, other than receipts or accruals of a capital nature. Now, so what are we going to do now? When we are trying to evaluate this element, one of the things you need to discuss, or that you need to discuss in your arguments, would be the nature of the transaction. That's one of the elements that you're going to have to discuss. That's number one. Okay. Number two, you would need to assess, all right, assess the intentions of the taxpayer. So what do I mean when I'm saying assess the intentions of the taxpayer? There are two types of intentions. Number one, which we have to discuss, it's called the primary intention. And you also have to discuss, the secondary intention, but that's where normally we are going to be assessing if ever there was a change in intention by the taxpayer. Okay, guys, it's gonna cut, but we're gonna have another part to this lesson. So you just connect immediately after it ends. So you connect immediately and then we proceed. All right. Are we together?